On this video, we're going to talk all about refinance closing costs, and we're getting started right now. Hey, what's going on? I'm Emmett Dempsey, mortgage broker and owner of Treasure Coast Mortgage here in Port Saint Lucie, and welcome to another video. On this channel, we talk more about mortgages, the home buying process, and some cool things around Port Saint Lucie and the Treasure Coast. So if you're new here, please think about subscribing. Okay, refinance closing costs. Now this is for people who already own a home and have a mortgage. If you're looking to buy a home, I did another video about purchase closing costs right here. So go ahead and click on this link and go ahead and check out that video. Refinance closing costs. It's really not that much different than a purchase. It's just usually it's in the way that they are paid for. Whereas on a purchase, you had to come up with cash because remember on that one, it's your down payment, closing costs, and prepaids, and all those things had to be paid in cash. Whereas on a refinance, you pay your closing costs out of equity. And most of the same closing costs are there. There are some slight variations on a refinance, and I'm going to go ahead and do a detailed analysis in a minute, so go ahead and stay tuned for that. But really, that's really the general difference. Now, when I present options via Mortgage Coach, and that's what I'm going to show you in a minute, I do a side-by-side comparison because a refinance effectively is what you have now versus what's possible. And if you don't like what's possible, then you stick to what you have. And I'm always very honest and look like here we go. Should you do it or not? Here's your benefit. Here's what it costs. Here's your break-even point. And I show you different points in time, usually 5 years, 15 years, to see if the closing cost makes sense. So without further ado, let's go ahead and take a look at a refinance closing cost scenario. Here we go.
Okay, here's a simple refinance analysis. Basically, this person who bought their house around $300,000 or so, do about $291. You got a 4.5 rate, and you've got your rates back in 2019, even 2018. You're in the 4s and 5s. So now's a good time to take a look at it. So what I did is I'll lay out a few options. 30-year fixed, 15-year, 20, 25. But just for these purposes, I just laid out a 30-year and a 15. Those are the most common. So look at here. Basically, it drops your rate from 4.5 to 3.375. Now, down here is a freedom point. 28 years on your current loan, but you do reset into a 30. Okay, so it drops the payment about $189 a month. So that's where the different savings is. This is a rate and term straight refi. This is just for comparison's sake, so we can talk about the closing cost on a refinance. Okay, in the 15-year fix, obviously it's a lower interest rate. Okay, but it's also a higher payment. So it jumps your payment by $500, but it really aggressively pays off your mortgage. So if that's your goal, then that's what we'll do. I've been doing that a lot lately too. So what I like is look at it over time. Savings over 5 years. If you were just continue doing what you're doing, you'd be paying interest about $62,000. If you go to a 30-year fix, that cuts it to $48,000. Okay, so and this includes any closing costs and points. Okay, so the net savings includes the cost of the refinance. Okay, so in the 15-year fix, it's a staggering difference. About $21,000 savings compared to just what you're doing now. So if you have to ask yourself, okay, what am I making on this deal, on this refinance? Here's the answer. Okay, so 30-year fix about $9,000-ish, and then about $21,000 on 15-year fix. And then over 15 years, it just gets more and more. So you would be paying $164,000 in interest and mortgage insurance, and then if you go to 30-year, it drops to $126, and then drops to $66. Okay, all right. So let's go dig into the actual closing costs. So more info, your closing costs. Basically, well, let me go back here. The payoff is, let me see here. So you'll go to the more info. Here's your closing costs. Okay, so your fee detail. Now, origination, processing, underwriting, those are our lender fees. Now, generally, I only charge a processing fee around $7.95 unless we go what is called borrower paid, and then it changes. It usually we charge origination and give you a lender credit to cover it, but that's a subject of a different video or conversation. Okay, your credit report, flood cert, your settlement fee for title, lender's insurance. The only difference is now is that you can roll these costs into your loan. Okay, so you're financing these closing costs. So, and like I said, you're using your equity in order to finance them to drop your rate to get you a better situation. So also these reserves, you have to build a new escrow account, okay? So you might have bought your house and have an escrow account and you're making payments and they pay your tax and insurance. When you refinance, you got to build a new one. So what the money that's at your current servicer gets refunded back to you after funding. So, when you wonder, like, well, what happens to the money at escrow by old company? This is what happens. We have to build a new escrow, or you can decide, depending on your loan program, what's called waiving your escrows. So basically, you can pay them yourself. I know here in Florida, taxes are due in November, and then your insurance is usually due the anniversary when you bought your house. As long as you are disciplined enough to have that cash flow available, you can do that. That's your money. It's just you're giving it up to the lender in order to pay your tax and insurance. So that's kind of what is right there. And these are your no point rates, because if you were to buy it down, you can look at scenarios here, compare and contrast. Is it worth it? Am I going to stay in this house? All those different things. And this reinvestment tab is usually if I add up what's called a reduction payment. I didn't do it on this scenario, but I can say, look, okay, what would happen if I roll that 189 back on top of it? And then generally it'll give you a new freedom point. So I run those analyses as well. Just what an extra few $100s a month really adds up over time. So that's basically the gist of a refinance closing cost. It's your payoff plus your cost equals your new loan. So that's what it's going to be. So your loan amount does go up, but it goes up by the by the closing costs and prepaids. So because there's no down payment per se, but there's just closing costs and prepaids to pay. So that's it in a nutshell, and I hope that was informative.
Okay, and welcome back. That was an informative deep dive into a refinance. And again, it's really just what you have now versus what's possible. That's the way that I frame all of the mortgage coaches. So you can see it side by side. And if you like it, we'll definitely move forward. If you want your own personalized consultation, I direct people to download my mobile app. So if you text the word Emmett, E-M-M-E-T-T, to 36260, that's Emmett, E-M-M-E-T-T, to 36260. And here's a little example about what it looks like. There's some cool tools, a buyer's guide, and some cool information on my mobile app. So definitely go ahead and do that. I want to thank you so much for watching, and I'll see you on the next one.